Hello everybody, in this video I'm going to be doing a very brief stock analysis on Royal Caribbean, and this is not so much going to be a deep dive into their financials, but more so me giving my opinion on the industry as well as giving a general outlook for the company. So before I actually take a look at the stock, there's a couple of quick things I wanted to address. The first one is that there's a no sale order until September 30th. And that basically means there's not going to be any cruise ships taking sail out of the United States until at least September 30th, but they're all most likely going to be later. But there has been a lot of talk about this getting pushed back again, which is a really big concern. And then this is saying that Royal Caribbean is not going to be resuming operations until November 1st, and I think the other cruise lines have followed suit. But this very well could change, and in my opinion, it may end up being more like December or January. And those were just directly off of the Google search results, so you can be sure to take a look at those as well if you would like. But now, without further ado, let me get into taking a look at the stock. So right now, we're seeing it at $52, and at the very beginning of the year, at its recent high, it was at $133, and then it went all the way down to $19.25. So personally, I bought a share at about $100 and then another couple of shares at $90 and kind of followed it all the way down. And I bought the last share at maybe $30-something, 38-something. But I really wish I had bought more at 19. That would have been really incredible. When these cruise lines were at their absolute bottom, I was really worried, not knowing if I was going to see my investment back, but I really should have invested more and just been confident in it. But if you did pick up a couple of shares at its recent low, then that's just really an incredible investment, especially after that dividend is reinstated. And even now at $50 for this stock, when it recovers, it's going to go back to its previous high. So even now at $50, it's a pretty solid investment in my opinion. And here, if we take a look at the 6-month chart on Yahoo Finance, towards the beginning of COVID, which was late March, I suppose, it was at its recent low of $19.25, and then it's been at a somewhat steady incline ever since, working its way back up to $52. And unless the no sale order gets extended, I think it's just going to continue to approach its previous high for another year or possibly two. Now, just taking a glance at revenue and earnings year over year for the last 4 years, we see a steady increase in revenue and earnings, which is always great for a growing company. And then what's a little bit more important is revenue and earnings for the last 4 quarters. Revenue a little bit down in Q4 of 2019, which is somewhat normal for the cruise lines. But then in Q1 of 2020, we see a massive earnings decrease, which was as to be expected. And we're probably expecting to see even lower earnings in Q2 of 2020 because they were still earning money for a good chunk of at the beginning of the year. Now I'm going to talk about some points from the bulls and the bears by analysts on Morningstar and here in just a second, but here to me is why Royal Caribbean is the best pick out of all 3 of the big major cruise lines. And it's really because they're building the biggest and best ships on the entire market. Here we can see Oasis class and Wonder of the Seas being built, expected in year 2023 and 22. That may be pushed back a half a year now. That remains to be seen. But Royal Caribbean continues to reinvest in their fleet in a way that the other cruise lines just don't do. Now, Norwegian definitely has some amazing ships as well, but just by sheer size, Royal Caribbean really takes it on this one. And now, as I said, I wanted to take a look at a couple of points by the bulls and the bears. So the first point is saying, kind of in a nutshell, that Royal Caribbean is doing a lot more to capitalize on the AP market than the other North American cruise lines. And I think this is absolutely going to be fantastic for long-term growth. And then the next 2 points aren't quite as important for long-term growth, but the second point is that if COVID recedes quickly or a vaccine is developed imminently, yields could recover faster than we currently anticipate, which is hopefully we're going to see one in Q1 of 2021, but that also remains to be seen. One developed imminently is pretty doubtful. And then just the last point is that significantly lower fuel prices could help benefit the cost structure. And I actually don't know what it is as a percentage of their costs, but it's definitely in one of the top 5 costs for cruise ships is their fuel. And with fuel prices being really, really low or near historical lows, that's definitely going to benefit cruise ships in the coming months. And I also definitely wanted to take a look at a few points by the bears. And the first 2, in my opinion, are kind of weaker points in that there's The first 2 points are that there's weaknesses in consumer spending, which I don't necessarily agree with. We've definitely seen a lot of job loss, but people are still going to want to be going on cruise ships, and it's not going to be because of discretionary spending that they don't want to. It could be definitely could be COVID related though. And then volatility in input prices, including commodity prices, particularly in energy. I already talked about how energy prices should be pretty low right now, and then I would think labor and food costs would also be the same, if not lower, than before COVID. So I'm not really sure how that's a weakness or a negative point. And then the last point is really what everybody's worried about and why the stock price has been so volatile. It's that the COVID headwinds could persist longer than expected, which is definitely a possibility. If we still don't see a vaccine or really good treatment a year from now, I think the cruise lines could definitely be in big trouble. And then the last thing I wanted to take a look at is the research report overview. Morningstar gave RCL a 3 out of 5 stars, a no economic moat, and I think they're pretty stingy with their economic moat status. I would say they have a narrow economic moat just because they have a really strong brand and arguably the best fleet of cruise ships. And then fair value of $52 right now, which is exactly almost what the share price is currently at. Uncertainty, which is very high, which is pretty fair. And then standard stewardship. And interestingly enough, Carnival actually has poor stewardship, which I actually don't know too much about. But overall, the research report overview is not too telling in and of itself. I have a ton of other brief stock analysis videos very similar to this one, so come check that out on my channel. Let me know down below if you have any questions or comments, and thank you so much for watching. Subscribe for more content.